This week, I would like to talk about something that doesn't exist, and that is the perfect investment.
Nice.
Which we probably talk about this or talk around it all the time, but it's a really important thing. So we're going to do it again this week on the Furlo Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing, including things like non-existent perfect investments, where perfect math rules the day. And our mission is to equip people to invest wisely in both property and people so that together we can build perfect wealth while improving perfect housing. I suppose. I'm James, and this is my perfect wife, Jessie.
See, that is true. But the perfect investment, not so much. No, I thought for a minute
Thanks
you
for
were going to go like
clarifying that.
mythical creatures, unicorns, dragons.
Oh, no, those are legitimate. I'm kidding. They're not at all.
I was like, wait. I mean, dragons. I did
So this
listen
is
to the Bible Project.
total side note. Don't want to go down this route. There are some people who believe that
Yes.
UFOs are actually demons. that we're
Okay.
seeing.
Wait,
We
was that on the?
just heard the same thing on the same
I think we did.
podcast.
This same podcast.
Yeah,
Yeah,
yeah.
yeah. Oh yeah, I heard that.
But which I was like, oh, that's a new one for me. I have never, I haven't put a lot of thought into it. But
Yeah.
I was like, oh, that's an interesting interpretation. Because I definitely do believe that demons exist.
Yeah.
But
I mean, it's one of those things
know.
that's like,
yeah,
okay,
we're going down that route
this
this
is
week.
not-
Let's go.
a make or break like issue. If
Yeah,
I
yeah,
don't
yeah.
figure this out in my life, it is still going to be okay.
You still have a good life.
I'm going to have
You're
eternity
still-
with Christ. It's going to be
Cool.
fine. But
But
super intriguing.
it's always...
And it's like, yeah, demons do exist. I do believe that. So it's like, how would I describe that? Or
Yeah.
is it possible?
I also, here's my tie-in. Here's my tie-in to all this. I don't think it's 100% one way or the other. I don't think
That's
it's
interesting.
every single UFO sighting is a demon, or it's not, or it's just an airplane, or it's
Yeah,
something else.
that's true.
Honestly, it could be of some military test going
Sure.
on. It could be some
explosion
spiritual
or
being that's
some
going on.
lights or-
It could be beings from another planet. It could be all of them. Like, it's
I
okay.
don't know how likely that last one is. But
Okay, but but my point is, you don't have to go all the way into one camp
that's true.
in order to. You don't have to reject everything else.
Yeah.
And I think
Often
this
there's
is-
not one explanation.
Yes, and I think here's the tie-in. I think this is the problem that some people run into with investing. All the numbers have to be perfect. They all need to align a
Interesting.
certain way.
Yeah.
Otherwise, they reject it and go, "This isn't for me." Because you can have something that is, quote, a good investment,
Yeah.
and still has problems
Yep.
from all sorts of stuff: the physical asset to the operations,
Yep.
to the tenant, to the time and history
Sure.
that you're in, the market, like all of that. And
Well, often there's something that's not perfect, like you're going to say.
right. And that, yeah.
Something you have to make work.
Yeah, and I think, we'll try to just right into this. I think one of the issues that we run into for ourselves, which makes us like focus on those amazing investments, are a few things. Number one, you get survivorship biased, right? It's the investors who were successful, who found good deals, who they're the ones who share and talk about it. So you go, oh, like this must be, quote, what everyone's finding. And the answer is, well, no, not really. Or you're talking with people who don't really have any deal experience. They've just heard stories, or they've heard other stuff, or they're spreadsheet junkies and they've underwritten a bunch of deals, but they actually haven't done one yet. That happens. Or this also happens, and this is something that you and I need to be careful of, is they compare past deals with current deals. And I
Yep.
think about our Lion apartments, which we've got, what was that? It was over 10 years ago, 11 years ago now. And it was a very different market back then.
Yeah.
Very different situation. Tiny little difference is back then, the rule didn't exist that said you had to compensate everyone for moving out. Now, we did.
Yeah.
And so it was okay. We were on the cutting edge. but just things were different. And so comparing current investments today to that one
Right.
just isn't, it's not necessarily wise to do.
Yeah.
And I think the other thing that people run into is just analysis paralysis, and that makes you think about, or what am I trying to say? Under the guise of, I'm waiting for a better deal.
Sure.
I'm waiting for the better numbers. And
Yeah, you just keep researching and it's never quite good enough.
yeah.
Yeah.
Or I don't know, hypothetically, you spend 18 months looking for your first duplex 'cause you don't know what you're doing under the guise of, I want to look at 100 properties to fully understand the market first, which may or may not have happened. Though it was a ton of fun.
Yeah.
Driving around.
We did learn a lot. So,
We did.
I mean,
Yeah, no.
you could learn a lot in your analysis.
Well, that's what's hard about, right? Some of these things, it's like, it is good. You do want to analyze a lot of properties and you do want to look at a lot of things and you do want to understand the market. Like those are not inherently bad things.
Sure. But set a time limit.
But it can tiptoe into a not good thing. I'm sure, right? There's got to be like a limit to eating something healthy, right? Like drinking too much water, you can drown, even though water's really good for you.
Yeah.
Or having
eat a bunch of carrots, you turn orange.
too much carrots,
I don't know.
I guess. I don't know. I feel like
Too much of a good thing
a lot of
can be bad.
Yes, exactly. So here's the reality: is that all deals have problems, and the professionals, they're not looking for those perfect deals. Instead, they're trying to figure out if they can price in those problems.
Oh.
Yeah.
So it's like finding an okay deal, but making it work.
Right. So, and that's another way to say it, but saying like you find a deal that maybe has a lot of maintenance, deferred maintenance that needs to happen.
Okay.
So you go, well, I would normally pay X, but now I'm going to pay X minus that deferred maintenance.
That makes sense.
Because that's what I'm going to have to spend to get it back up to actual X.
It's not necessarily a non-negotiable because it can be fixed, but
yeah,
you have to tweak.
Or if you're in a
offer.
market where vacancies tend to be higher than normal, you put that into the underwriting model. You price it in. I'm not going to pay a normal amount because vacancies are higher. Or whatever, rents. They're not rents in, I don't know, in Lebanon, in Albany are not going to be the same as Corvallis.
Yeah.
I'm going to price it in. I'm not going to pay the same amount for a property in Sweet Home as I am in Portland.
Yeah.
Like, you're just not going to do it.
So is that the main, or like the primary way that you adjust the deal is in the underwriting?
Yeah.
Before you're making an offer.
Yeah, there's two different styles of underwriting. You have your tops down and then your bottoms up. Way we do it. Tops down is pretty classic. Well, what are similar properties selling for right now? That's your tops down. And especially in the commercial space, there's new cap rate math to figure it out. If it's single family homes or, residential stuff, again, that's the whole comps thing, right?
Yep.
And that's what, if you're a seller, that's what you use to figure out, here's what I think it's worth. The more reliable, better way, but can also be more tricky, is to do a bottoms up, which is to say, I know I want to make X amount of money. I know my expenses are this much. I know the rent I can get either now and shortly in the future is this much. Do all that math and go, this is now how much I'd be willing to pay. This is my max offer to hit my profit number, which is how I actually do it.
Yeah.
Now, I'll put in their number to start with because I'm kind of curious, because that to me
How
is
does this compare?
how big is the difference between what they're expecting versus what I can actually do.
Right.
And that will determine how interested I am in pursuing it. For example, there's a property near our house. It's a combination of some offices and some residential. Super interesting.
Yeah.
Because I'm like, dude, I could probably walk there if I had an office there. There's currently a property management company there, actually. So I'm like, oh, it could totally work. Except it doesn't have a warehouse, which is something I want. But anyways, it's intriguing to me. But the asking price is so much where I'm like,
that's not even going to be close.
I need like a 60% discount for the numbers to work here. And I just know I'm not going to get them.
It's not going to happen. Yeah.
So whatever. And the problem is it's a property he's already fixed up. There aren't those problems that I can be priced in and he doesn't have anything to go like, yeah, I know. And so I just,
well, and for the right buyer, that could be a good deal.
Oh, 100%.
Because they're not looking to add value necessarily or catch up on maintenance or any of that. They're like, no, I just want to put my money somewhere where I know it's going to be stable and I could sell it in the future or whatever.
Yeah. Yeah.
So.
Right. Yes. So what I'm trying to make is different from that other person is trying to make. And how I'm going, my business model and how I'm going to manage it is different than that other person. Yeah. If they're going to be owner occupied and have the entire thing and they're like, yeah, whatever. Cool. Yeah. I'll pay a little bit more to have complete control and not be worried about being kicked out.
Yeah.
Like that's the thing. I work with an organization right now. They're renting a space and everything's great and their rate is unbelievably good. But there's always that threat of, man, like they may have to jack our rate up significantly, or they just can't house us anymore. And so we're having very, not intense conversations, but, we're just kind of
Going through the
lightly like,
options.
man, what would this look like if we had to go somewhere else? What would that be? And if we did, does it make sense to buy so that we kind of own our destiny a little bit more, or not at the whims necessarily? But we're nowhere near that. But that's that. Yeah, you could totally price it in. We're like, I'm willing to pay a little bit more for the stability over the next 30 years.
Yeah.
Instead of not. Totally a thing. Yeah. So again, you just want to have the any risks, any unknowns, any uncertainties, any problems. You just want to have those priced in, because everything's solvable within reason.
Sure.
And for the right price, you can get it.
Yeah.
It's funny. We've got another property that we're looking at in Sweet Home. So we're building a home. We're almost done with it. I actually, there's a chance that by the time this airs, it's actually live on the market.
Be sweet.
We're that close. And we looked at the neighbor's property next door, and it's a piece of garbage. Like it's Teardown. Like it's not good. They've got plants everywhere. You can tell it hasn't been lived in for a while. And the last people who lived in it were not good people.
Yeah.
And so we've actually got a hold of the owner, and we're just talking to him and like, hey, here's your situation, whatever. And we're the plan would be bulldoze it,
Build new. Yeah.
It does have a nice big garage, which is actually very similar to the one that we just built. Like we would build the exact same house just right next door.
Okay.
Because like so much of it's the same.
Yeah.
But we were talking with the guy. We're like, well, given the economics and how this works, like we know a new house will sell for this. We know to build a house, it will cost us this. We know we have to get rid of the existing house, which will cost us that.
Yeah.
So would you take $20,000? And he was like, no. Like, okay. But I know that there's potentially, I don't even know if it's habitable, to be honest.
Yeah.
But I have a hunch, like he could find someone else who might be willing to pay $50,000 or $70,000 for it. I don't think it's worth a lot more
And
than
try
that.
to fix it up.
Yeah, potentially they do that. Or there's a one-man show, and I've got a friend. I've known him for, let me think about this now. 4 years, going on 5 years, I think. And he's been working on the same duplex project.
Oh my.
Him and his buddy.
For 5 years?
He's got it up in Salem. He lives in South Corvallis. And he's
All
like,
right.
some nights and weekends, obviously not very many, he goes up and he works on it. It's just the two of them.
Wow.
And he's like, yeah, we're working through. And he goes, we got one side done. Yeah. And we've got it to studs on the other side. So we're making progress.
So frustrating to me.
And I know. And I'm like, oh my gosh. Like, I thought I was moving slow. This is kind of insane.
Yeah.
So but for him, this might be a great deal because he's already driving an hour to Sweet Home. It's just him and his bud who are building it. And he's like, we can take 3 years to do this, whatever, or 10.
How is that even profitable though?
I don't think it is. Well, I don't think he's probably not valuing his time. That's probably what it is.
Okay.
He's just looking at the material cost, and sure, he's got some holding costs, but
Sure.
like he doesn't have any electricity or water really right there now.
Weird.
And so for him, he's like, yeah, holding costs are pretty cheap. And I think he paid cash for it initially.
Yeah.
So
It's just to say, like, a different way to look at this, I feel like, is the perfect deal doesn't exist in general,
yep.
but a perfect deal could exist for you. You just need to think through, like, what are your parameters? What can you afford or not? And what are you willing to put up with or not? So, yeah. Not that you should be searching for the perfect deal. You should analyze appropriately and then,
That's fair.
make decisions.
And I would also say, for me personally, the best deals often look the worst on the surface for me. And as we've established, there are some other people where that's not their situation or what they're looking for. But the problem is properties that are really well fixed up, they have everything priced in and they are at the market. And if you're in this game to make some significant returns,
it's not going to be turnkey places.
Yeah, and that's why I'm buying. That's why I'm investing. I'm here. I'm in it to make money off the deal, not for some other reason. And this is just convenient or helpful.
Right.
And I would say too that your job as a passive investor isn't to find the perfect sponsor or the perfect deal that they're investing in either. It's to find a sponsor who's able to price those things in and solve those problems and and has mitigations for when there are issues.
Yeah.
I guess. Yeah. So one thing that you can do though is, and we talk about this with tenant screening, is define your good enough criteria, right? Instead of saying, here's what perfect looks like, here's what my minimum looks like. It's got to be something, I don't know, my cash for cash, like what's the minimum you want to make on that? You know, for you were like, when we first got started, you're like $100 a month.
Yeah.
That absolutely has to be positive.
Yep.
And maybe that was your true floor was
it has to be positive.
And ideally at least $100 a month.
Yeah.
That was your floor for that cash on cash. Maybe there's a market type. I know some where they go, I only want to be in a diverse, growing, stable market. They don't want to be in the tertiary ones. They want to be in primary markets. Or it's a sponsor track record. I don't want to be somene's first.
Yeah, they have to have done 10 deals.
I want to at least be their fifth or 10th
Sure.
or 100th, I guess. I don't know.
Wow.
I'm sure they're out there.
Yeah.
But, like that's what are those minimums that you're like, this is really like what I'm looking for. And then if it meets them, awesome, cool. You're willing to move forward. And we do that with tenant screening. We go, here's our minimum income that we want. Here's our minimum credit score. Here's minimum for landlord recommendations, like all those things. And if they made it, awesome. Like we will rent to them.
Yep.
And so you want to do the exact same thing. I also think you do want to look at the problems. Don't just ignore them and go like, oh, they're good. But like figure out, are they solvable? Can you do it? And how are they priced in? And then also just try to understand what your own risk tolerance is. I remember I was looking at a deal in the Midwest, actually, and it was someone else who was doing it, and he just wanted to bring me in to help raise funds for it. And he was going to spend more on the rehab than he was on the purchase price. Like it was a big project.
Yeah.
And he was like, we're going to make this thing awesome and amazing in a part of the town that was like not awesome and amazing.
Yeah.
I didn't fully understand how he was going to reach the rents that he was going to reach given what the market was actually doing.
Yeah.
There's also concern that he had another business partner who owned the construction company, and this was their first project.
Oh.
So that's a track record
Sure.
issue.
Yeah.
But more importantly for me, there were obviously a lot of problems with this property, and they were solvable with a ton of money. But for me, I was like, I wasn't quite connecting. I was like, yeah, the spreadsheet says that if you can achieve these prices, it'll totally be worth this much. But that top-down analysis is not telling me this.
Yeah.
So I struggled with that. So those
Didn't
are
line up.
Yeah. And then I think that it's also good to get in on a small deal to calibrate. Man, you learn so much by that first one. So even if you're only able to put in, $25,000 or $50,000 to get going, I think it's worth it. Yeah. You're gonna learn a lot instead of looking at hundreds of deals and saying maybe someday. So yeah, that's what I got. So in conclusion, the perfect deal does not exist. It's fake. It's fiction. Instead, what you want are priced in problems, and that's where opportunities exist. And inaction can also cost you because you're not going to learn. And I think what separates professionals from others is not necessarily that the professionals find better deals. It's just that they're good at evaluating the problems and negotiating in such a way where everyone comes away saying, yeah, all right, I get it. Like, this is fair to put it down.
They're turning those dials and those knobs to make it work.
Here's my question for you, dear listener. What problem in your next deal are you actually being paid to take on? So what problems are you solving?
Positive way to frame it.
How are you getting paid? Exactly. And if you would like to learn more about the types of problems that we solve, you can learn all about that at furlo.com. So with that, thanks for listening. Have a great week.